The Russia-Ukraine war has emerged as a focal point that is now creating a new world order. That news, of course, came a day before oil-producing nations decided to cut their production by millions of barrels each day.
Now Russia's largest oil producer, Rosneft, and India's top refiner, Indian Oil, they have reached an agreement to use the Dubai benchmark.
India's largest oil and gas company, Oil and Natural Gas Corporation Limited, ONGC, has unveiled plans to invest a substantial amount of $12 billion in renewable energy projects. ONGC, the leading producer of oil and gas in the country, aims to significantly enhance its renewable energy portfolio. The company's chairman, Arun Kumar Singh, announced during a press conference that ONGC is targeting an impressive portfolio of 10 gigawatts, W, equivalent to 10,000 megawatts, W by 2030. This is a remarkable increase from the company's current renewable energy capacity of just 189 megawatts as of March. Singh emphasized the need for India to strike a balance between meeting its growing demand for fossil fuels and embracing the development of green energy sources. While acknowledging that India's demand for fossil fuels is expected to continue growing until 2040, Singh stressed the importance of intensifying efforts to transition to cleaner energy alternatives. He highlighted the necessity for both worlds, fossil fuels and renewable energy, to coexist harmoniously to ensure a sustainable future. Despite ONGC's push into wind and solar electricity generation, India is projected to remain heavily reliant on coal power until at least 2030. The Coal Minister of India, Prahlad Joshi, made it clear that the country has no immediate plans to phase out coal from its energy mix. Joshi addressed a parliamentary committee, stating that coal will continue to play a crucial role in India's energy landscape until at least 2040. He justified this position by highlighting the affordability and sustained demand for coal as an energy source in India. Joshi's declaration comes amid increasing calls for countries to shift towards cleaner forms of energy at the United Nations climate talks. During the COP27 talks in November, UN Secretary General Antonio Guterres called for urgent action to reduce emissions, including phasing out coal globally by 2040. However, India has consistently resisted making stronger commitments to renounce coal, as witnessed during the COP26 talks where India, along with China, blocked more ambitious commitments to abandon coal. India is not alone in facing challenges in transitioning away from coal. The COP26 climate summit hosted by the UK and Italy last November aimed to address runaway climate change. Several nations pledged to end deforestation, curb CO2 and methane emissions, and halt public investment in coal power. However, less than a year later, many developed countries are scrambling to resume coal-based energy generation due to energy supply disruptions triggered by the Ukraine crisis. The Observer Research Foundation reported that the surge in liquefied natural gas, LNG, prices left coal as the only viable option for dispatchable and affordable power in various parts of Europe, including Western Europe and North America, where explicit policies to phase out coal are in place. In Germany, coal mines and power plants that had closed a decade ago are being repaired, leading to a resurgence in coal-fired power generation. Industry observers have described this as a spring for Germany's coal plants, with the country expected to burn at least 100,000 tons of coal per month by winter. This is a significant reversal considering Germany's goal of phasing out all coal-generated electricity by 2038. Other European countries such as Austria, Poland, the Netherlands, and Greece have also restarted their coal plants. China, which has the highest number of operational coal power plants with 3,037, has seen a surge in coal imports, increasing by 24% month-to-month in July. The demand for coal rose as power generators sought to meet peak summer electricity demand. Germany, the largest economy in the EU, has 63 operational coal power plants. ONGC's commitment to investing in the renewable energy sector aligns with the broader trend observed among major energy companies in India. Reliance Industries, India's oil to telecoms conglomerate, announced last year its intention to invest a staggering $76 billion in green energy projects within the country over the next 15 years. In addition, the company had already committed to investing over $10 billion in 3 years to establish a new business unit dedicated to constructing solar module, battery storage, electrolyzer, and fuel cell factories. Similarly, Indian Oil Corp, the leading refiner and fuel retailer in India, revealed in March of this year that it would consolidate all its green energy businesses into a wholly owned unit. The aim of this consolidation is to bolster the company's clean energy division and further contribute to the country's renewable energy efforts. These significant investments by ONGC, Reliance Industries, and Indian Oil Corp demonstrate a growing trend among major energy companies in India to prioritize and actively participate in the renewable energy sector. This shift aligns with the global call to reduce reliance on fossil fuels and embrace sustainable energy alternatives. However, it is important to note that India's reliance on coal power is expected to persist until at least 2030. As reported by Bloomberg, citing the country's Central Electric Authority, Coal Minister Prahlad Joshi emphasized that coal will remain a vital and affordable energy source for India, with its demand yet to reach its peak. This stance reflects the practical considerations of balancing the country's energy needs with the urgency of transitioning to cleaner energy sources. Despite the ambitious goals and commitments set during international climate talks, the challenges faced by countries in fully transitioning away from coal have become evident. Energy supply disruptions, such as those triggered by the conflict between Russia and Ukraine, have led to a resurgence in coal-based energy generation in various regions, including Europe and North America. In this complex global energy landscape, the investments made by ONGC, Reliance Industries, and Indian Oil Corp in renewable energy projects signal a significant step towards sustainable development in India. By diversifying their portfolios and embracing cleaner energy alternatives, these companies contribute to the country's efforts to reduce greenhouse gas emissions and mitigate climate change. It is crucial for governments, energy companies, and stakeholders worldwide to continue working together to address the challenges and find innovative solutions to accelerate the transition to a greener and more sustainable energy future. While coal may continue to play a role in the energy mix for the foreseeable future, the investments in renewables indicate a shift towards a more balanced and environmentally friendly approach to meeting India's growing energy demands. Do you think the investments made by major energy companies like ONGC, Reliance Industries, and Indian Oil Corp in renewable energy projects will have a significant impact on India's transition to cleaner energy sources? Share your opinions and insights. Thanks for watching our video. We hope you found it helpful and informative. If you found this video helpful, please give it a thumbs up and consider subscribing to our channel for more content like this. And don't forget to hit the notification bell to be notified when we upload new videos. Thanks again for watching, and we'll see you in the next one.